Everyone, today I want to talk about something that not a lot of people are talking about, and that is insurance rates and affordability in housing and how that coincides together. So, in the last 2 years, we have seen some major increases all throughout the country in insurance rates. Home insurance, along with your property insurance, property taxes, everything has been going up substantially. And what that does, especially to your payment and interest, mortgage payment for your reserves that you pay for on a monthly basis, that has been skyrocketing those payments along with interest rates at the same time, creating kind of a perfect crazy storm of unaffordability. So let's go through some stats and some articles. So there's an article out of ABC Action News that's based in Tampa, and the average property in Florida over the past year has seen increases of upwards of 30%, especially since all these insurance companies that do flood insurance have went under because they got insolvent because of how much claims they paid out due to fraud, due to wind, due to storms, hurricanes, all sorts of stuff. That is coming into a big picture of where do we go from here? They're not the only state, but the Sun Belt is getting crushed right now, the most out of everyone, because insurance companies became insolvent and the state legislature put in some new laws, especially with Citizens Insurance, which is one of the biggest state insurers that's backed by the state in the state of Florida, which is causing people to get flood insurance, whether they're in a flood zone or not, which is dramatically increasing costs. So in Florida, the average insurance cost, according to this article by ABC Action News, is well over 30% above other states, which the U.S. average homeowners insurance is about $1,544. I think they're using a medium home price of $350,000. Well, the average Floridian is paying $4,231. And that's going up even more because these rates are increasing. I'm hearing from folks on properties that are rental properties, that are short-term rental properties, that are long-term rental properties, commercial properties, that the quotes that they're getting on their renewals is tripling, quadrupling what it used to be. Somebody got a quote for $6,200, I believe, for a single-family home that's maybe worth $400,000. That's in the X-flood zone, which has the least amount of variability in a 100-year basis of flood. And then we go to this other article by CNBC, which is stating that, Florida's not the only state that's having huge increases. Minnesota had a 13.9% increase in 2022 of home insurance policies. And we're in a cold state. I'm from Minnesota, do business in both Minnesota and Southeast Florida, and the insurance differences are dramatic, but they're catching up, and they're catching up with everything. And it's not only that homeowners insurance, it's also auto insurance. Auto insurance is going up through the roof, and the discounts that you used to get with auto insurance, from having a drive safe, from having a little chip in your car to all that stuff, we were averaging about $150 to $180 in savings per vehicle in our household on having those little trackers in our vehicles. Well, so far, starting last year, our discount was $6.71 or something like that. So those discounts are going away. So insurance companies are holding more and more money, discounting less and less. Yes, costs are going up. Yes, inflation's causing it. Construction costs, all sorts of stuff is going up. Property values are also raising, which is also causing your insurance rate to go up because the rebuild value and the replacement value is so much higher than it used to be. So it's causing all of these issues all over the map. But what that does to the housing market that nobody really talks about is it's dramatically reducing the amount of mortgage payment that people can afford per month, especially with interest rates, now in the low sixes, if you have perfect credit, of course. But it's not helping. High interest rates, high insurance costs. And the third thing, too, is with how fast house values have gone up in the last 2-3 years, your property taxes are usually 2 years behind. So now those property taxes are catching up to current values, which is also causing your property taxes to skyrocket all over the country. That doesn't include eggs, which have been skyrocketing like crazy over the past few months. It doesn't include your car insurance, which has also been skyrocketing as well. So all these extra costs that are adding into this perfect storm scenario is causing instability, in the housing market, even though that, in the last week since rates dropped, I think it was like 90 basis points or something like that, to the low to mid 6% range, and mortgage applications shot up by 24%, are these people going to be able to purchase when they go through final underwriting and they get these insurance quotes and the property tax assessments and everything else that goes into this bigger picture that, a lot of people are not talking about? And that also goes for commercial properties as well, because commercial properties insurance rates were already astronomical on rentals, on short-term rentals, on commercial buildings, whatever the case is. But now imagine, like Minnesota had a 13.9% raise in insurance rates. If your policy was a couple $1,000s, that's not a lot. But now your policy is $25,000, $30,000, $40,000, $50,000. What does that do to your cash flow when that increase of 14% goes up, or that increase of 20, 30% in South Florida goes up to that big policy in a big commercial building? Well, it's going to cause you to repencil that deal, and it's going to cause you to ask for a lower price, because now your cash flow and your debt to service ratio does not cover your payment because of all these added additional costs that nobody seems to be talking about as a whole. Everyone just focuses on the micro. Oh, rates went down. Oh, prices are doing this or prices are doing that. But the whole picture, in the whole payment of ownership, you have to count everything. And remember, just because you get a pre-approval for something for $1 million that the bank says that you can afford it, it probably means that you can't actually afford it on your net pay with all your other expenses that aren't factored into your mortgage payment. And, this is going to cause a big stir up in the entire market once these things get realized into people's actual payments and the amount of properties that go under contract but never actually close, because once they get in underwriting and once they get into the nitty and gritty of everything, it's going to cause it to be unaffordable. Just my thoughts on real time, what's going on in the whole market. Please feel free to contact me if you have any questions, if you need some advice, if you're thinking about buying or selling or investing in real estate. There's some great deals to be found right now, especially in certain markets, certain price points. My name is Stas Manchek. Please subscribe to my channel. Hope to bring you up-to-date information a couple times a week. Thanks so much for watching. Have a great day.